Hello, in this video, I would like to show you how to value a company from beginning till the end. If you haven't watched my 19 videos for Apple Corporation, please go ahead and do so because those videos explains step by step how to value a company. In this video, again, I would like to just go through all those 19 videos in only one longer video. First step, I would like to go to Capital IQ and log into the Capital IQ system. If you don't have this system, you may want to just go ahead and use Yahoo Finance, Google Finance, or any other platform, Bloomberg, that you can go to. And please, if you are at Lemoyne College or any other institution, please make sure that you get your login information from your instructor. Okay, I logged into my system. Now I would like to study, instead of Apple, this time I would like to study Intel Corporation, which is traded in NASDAQ. I click on that, and then I will click on the income statement on the left right here. And then I would like download all the data for me. And it starts from 1990s. That's pretty good. I have long enough data. I need at least 15 years of data in general to be able to find the discount distribution for my data. However, if you don't have it, you may want to use quarterly data by choosing quarterly here. But I think it is much easier to use annual, and as a value investor, I don't really care much about fluctuations within a year. So I choose annual. Now what I'm going to do is download financials. It may take some time because it's a big file. I'm still waiting for it to be downloaded. And you can download in your H drive, but I would like to download in my thumb drive, which has plenty of space. OSD is my thumb drive. I just save it there. And then I will just open up this Excel file. Excuse me. And I would like to use Crystal Ball. And then File, Save As. I would like to save this as an XLSX file, which is the most recent version of Excel workbook. Save. Beautiful. You can see the Crystal Ball tab. Again, if you don't know how to do it, please watch my video how to launch a Crystal Ball tab. So you can see here that information about income statement, balance sheet, and so on about Intel. What I'm going to do is I would like to cheat. So first of all, I will click on this plus symbol right here and carry this sheet, drag it to the left, and label this as my intrinsic value. And then I would just go to my Excel file that I created for Apple, which is right here. By the way, I'm just going to delete the original data file here. I don't need that. I will just keep my XLSX file, and I will open up my Apple file. Again, please contact your instructor to get this completed file. In my 19 video series, I calculate these values one by one for Apple. Go through those if you need to. Now I will just click on top left corner to select my entire sheet, and then Control C, and then I will go back to my Intel file right here, and then Control V. Okay, I got the template from my Apple, so I'm done with it. I will just close the Apple file. I'm not gonna save it. No. Okay, now I'm in my Intel file, but Apple numbers. So let's go through row by row. First row, I don't need to change anything. These are my years. Means I'm in year 2020, and I'm gonna forecast next 10 years, and then terminal year. Risk-free rate, since I have done Apple videos recently, I will keep the same rates here. I don't need to change it. But if you are doing this not in August 2020, basically, please double check, look at my video for risk-free rate and update the numbers. Beta, so let's check the beta coefficient for Intel. I'm gonna go back to my browser, and then here, if I click on, I believe somewhere here, I should be able to do beta. So Control F, I will search beta is not here, no problem. So I need to find somehow the beta coefficient for Intel. Let's see whether I can quickly find that here. Maybe company summary, tier sheet. Let's see whether I can see beta here. Okay, perfect. Company beta is very, very low, 0.69. All right, I will use that, 0.69. Perfect. I will assume that this beta coefficient will be all the way till the end. However, I want to make sure that I change my decision variable here because it's quite different than Apple. I will click on define this decision, and then I would like to choose a interval that I think makes sense. In this case, let's go ahead and say between 0.5 to 0.9. Again, this is my assumption, my story. I choose 0.2 less than current and 0.2 more than current. And I would choose discrete here, and then I will change the step values to be 0.1 at a time. And click OK. And then expect market return. Again, it doesn't change because again, I did my video recently for Apple. These assumptions are good. Everything here should be calculated automatically from the above assumptions. Interest rate. Now we need to calculate interest rate for Intel. What I'm gonna do is equal to, I will go to income statement, and then I will scroll down here and find interest expense for the most recent year though, not 1990, right? I would just drag it all the way to the right. And before doing that, let me just freeze the pane so that we can see what's going on. I press escape, I click top left corner right here, and then view tab, and then I will click freeze panes. And now interest expense, so I know that I'm interested in this $537 million of interest payments. I'll go back to my intrinsic value sheet, and is equal to income statement interest expense of right here, $537 million in last year. Divide by the total debt. So total debt you can find in different places. I will just go to key stats, and then here you can scroll down and you can see the total debt of the company, which is $38 billion. Enter, and it looks like the interest rate is negative 1.4%. So I will put negative in front of it because all my numbers are positive in this spreadsheet. So basically, Intel is very, very low risk company. It looks like they can borrow money at the rate of 1.4% versus US government is 0.5%. The premium is very, very low. All right, next thing I need to do is calculate the tax rate. What I'm gonna do is equal to, go to income statement, and I will find the taxes that this company paid. Let's take a look at it, what's going on. I scroll down, and net income to company, income tax expense, perfect. I will take a look at it here. I can just divide this value by the company's EBIT. So what I'm gonna do is I will use EBIT I'm just trying to find my value. Okay, EBT including unusual items. So I'm just going to use this value right here, and that's going to give me my tax rate, 13.44. However, if you don't think that the last year is great representation, what I can do is go back to my income statement and calculate this every year to see whether I can see any kind of a trend. So let's do that. And you can see income taxes here. I'm just going to calculate here income tax rate. And here what you can do is, I'll start from most recent year. Income tax expense divided by EBT include unusual items. So I can see that right here. So it was 13.44%. And if I just drag this all the way to the left, you can see for every single year how that changed. Let's insert a scatter chart with smooth lines and markers. You can see that the income tax dropped a lot because this is more a Trump tax cut. If you assume that this is going to be the same next years, that's what I'm going to do. You can keep this range because in the past the tax rates were much lower. If you think that this is going to change right away in 2020 elections, just make an assumption based on that. So what I'm going to do is I will use basically last 3 years data, which is right here. So I think it's safe to assume that the interest rate, tax rate is around 13.44% because I'm more conservative. If we take the average of these three, I rather use 13.44. Perfect. So if I go back to my intrinsic value, so I will assume that 13.44 across the board. That's good. And row 8 calculates everything automatically. I don't need to do anything. Now I need to look at row 9, which I need to understand total debt to market cap ratio. Okay. I'm just going to do is equal to, I'll go to key stats again, and you can see here total debt divided by, in parentheses, again, total debt plus market cap, which is right here, $204 billion. And you can see that that's 15.8%. It looks like not so leveraged, but much bigger than percentage-wise Apple. Apple was around 6-7% or so. So you can see the market, this row 10 is calculated automatically, so I don't need to do anything there. Weighted average cost of capital is calculated automatically here as well. It's beautiful. I mean, cost of capital is much lower here in Intel. I like that. That's why the discount factors are calculated automatically row 12 beautifully, and our discount factors are much lower, which is beautiful as an investor. So now we need to look at the revenue growth rate. So let's calculate revenue growth rate for Intel. I will go to income statement and go up total revenue right here. I will calculate the revenue growth rate. Basically what I'm going to do is, in parentheses, 1991 value minus 1990 value divide by 1990 value, and revenue change is 22%, home percent. All right, so right down corner, black cross, drag it down, drag it right. By the way, if you think that I'm going so fast, please play with your YouTube settings. You can always change the speed of the play, this video speed. If you think that I'm going so slow, you can again increase the speed at YouTube. Or if you need to pause, please just pause the video and catch up with me. So again, I don't think that it's fair to calculate this last one because I don't have full year data. Looks like December is the year-end value for Intel, but I don't have year-end value for 2020. So I'm not going to do this because there's an overlap between 19 and 20 values here. So now let me again see what's going on with revenue in a scatter chart. Click on 2%, Control Shift left arrow to select the whole row, and then insert. Again, I would like to insert a scatter chart with smooth lines and markers. Looks like again the company Intel is much slower growth in comparison to right here. So I think that what I'm gonna do is, but there's no, I don't think there's a huge difference, and I have significant number of years here. Someone may just wanna use the years value starting from right here, 7th year after 90, I would say like 96 or 97. But I don't find any issue using all of it, and maybe I will just truncate my data, and around truncating upper limit of, I would say 24% is pretty good, and maybe I will truncate a 21% here as well as a floor. All right, so what I'm gonna do is, let's start with the base here. Intrinsic value again is equal to revenue growth. I will go back to my income statement, and I will scroll to the right, and revenue growth rate, I will use base year as 2%. Enter. Let me just label it quickly so that you guys know what I'm calculating here. Income statement, and this is my revenue growth rate. Okay. Now I would like to calculate for next 10 years. Go back to my intrinsic value. What I'm gonna do is I will highlight this 10 years, and on the crystal ball, you can see clear. You cannot just delete this. You need to clear it with crystal ball. And then I say yes, and these values are going to be cleared. I think it didn't happen. One more time, highlight it. Under crystal ball tab, click clear. Yes. Okay, so for whatever reason, I think I'm having a difficulty here. Let me just highlight this, press delete, right click, delete comments, and then under home tab, make sure that it is no fill. And all right, so I'm gonna do here, this cell, find distribution, crystal ball, define assumption, and fit distribution to data, and click on this little icon, go to income statement, and here highlight your revenue growths starting from 1990, which is your first year, 1991, sorry about that, 21%. Highlight the whole thing until 2%, click OK. These are all continuous, auto select, click OK. All right, click OK. And hopefully you get the result for your company as well, that is p-value greater than 0.05. Based on Anderson-Darling test, gamma distribution is the best fit, and p-value is greater than 0.05, so I can accept this distribution. Click accept. Again, if you want to truncate your distribution, that's not a bad idea. But if you think that this is pretty good, you can keep it. So what I'm going to do is I think I will truncate the data a little bit. Okay. So what I'm going to do is I will just click on this little icon right here and put a ceiling, income statement, and I would choose my ceiling as I discussed in the video. Most recently, company did not grow more than 24% or so. I would just choose this 24%. Click OK. And then I'm going to choose a ceiling as well right here. What I'm going to do is, actually, I think that this did not work. Okay, so you see, this is how you truncate it. However, you want to lock your cells. Otherwise, when you copy this, it's not going to work. So that's why I think I forgot to lock my cells for the data. Let me just close it again, and it's a good recap again. I'm here in this cell, and crystal ball, define assumptions, fit distribution to data, click on this little icon, click, and then income statement, and highlight your revenue growth rate numbers that you calculated starting from 2% here, and then highlight all the way till the beginning. It's right here. And then before click OK, press F4. that will lock your numbers. F4 one more time, F4 one more time, and F4 one more time. You see, I have dollar symbols in front of letters and numbers. That's what I want to do. Click OK. All continuous, auto select again, click OK, and OK. And you will see again, gamma distribution is the best. Click accept. And what I would like to do is, I would like to choose a maximum value. Again, it's my story, and I think that it is not reasonable to assume that Intel can grow more than recent growth rates of 24%, which is even 24% itself is a high number, but it's okay. And I press F4 to make sure that this cell is locked as well. You see that I have dollar symbols in front of letter and the number. Click enter. You see this truncate my distribution. I would like to do the same thing for floor. I will look at income statement and find recently what's the lowest growth. Maybe negative 21%. I like to be more pessimistic. You could use a different number, but this is the worst growth for a company in 2001. I want to just assume that because I like to run my numbers for the pretty much worst scenario, not worst scenario, but very conservative estimate. Click OK, and then enter. You can see that I truncated that too. And so I'm gonna click enter and click OK. So you can see my distribution here. On average, I will assume that the company will grow by 6.3%. Again, you cannot copy paste. You can go crystal ball copy and then highlight this area and then crystal ball paste. Perfect. And then after year 10, I will assume that the company will grow with US growth rate of 2.5%. Now I need to calculate row 14. Base year revenue number is equal to, I will go to my income statement, total revenue last 12 months. Intel generated $79 billion. Enter. And now, based on my numbers, growth rate numbers, I assume that this company will go to $150 billion revenue company in year 2031. Perfect. Now, row 15. Now, I would like to look at the EBIT and EBIT revenue rates and percent change. So let's calculate those. I'll go to income statement, and I will look at the EBIT of this company, which is operating income, right here, EBIT. And here I would like to calculate EBIT over total revenue. Let me just put my graph up a little bit so that it's not distracting me. Just put a different color here so that you know that I calculate this. I calculated the revenue growth rate as well. All right, EBIT to total revenue. Basically, EBIT 858 million divided by total revenue, which is 21%, not too bad. And then right down corner, you see the black cross, drag it all the way. And right now, this number is around 33%, which is great. Looks like the industry is not that competitive anymore. And I would like to again insert a scatter chart to see whether there is any kind of trend. And you can see that there is a beautiful trend here starting from 0.17. Right now we are in 0.31. So 14, 15 years of beautiful trend here. Looks like there is not much competition in the market and they can just keep increasing their EBIT to revenue range. Beautiful. I like to see these kind of things. I will put this one up at top. Now I would like to see the change in this ratio. Okay, so what I'm going to do is copy this, Control C, Control V, and then here percent change. Okay, we know how to do that from revenue growth rate. Basically, I'm going to look at open parentheses, recent data minus previous year data, divide by previous year data. You can see that it increased by 3 point something% here. And then I'm just going to change the color here so you know that, again, this is what I calculated. Click on that cell, 3% right down corner. When you see this black cross, drag it all the way to the right. Again, I don't feel right that you can do it for last year because, again, there's an overlap between these two. All right, so now what I would like to see is that whether there is craziness going on here. 518, I don't see, maybe it's like 45% is a little insane. 44%, 50. So I think these numbers are, some of them are a little crazy. So what I'm gonna do is, I think I could try to find the distribution, but I need to have at least 15 years. 2, 3, 4, 5, 6, 7, 8, 9, 10. I do shift left by the way, but 45 is so way too crazy. So what I'm gonna do is probably I'm gonna put I'm gonna use, let's try to fit a distribution, but probably fitting a distribution will be hard for this data because there are some crazy numbers, but let's try. Right, this is fun. I will go back to my intrinsic value. First of all, I would like to find the most recent one, base year, income statement, and then I will go to the end, which is most recent one is -5%, enter. But then I would like to find distribution here. Again, I will highlight these 10 of them, crystal ball, and clear my crystal ball data, yes. And then press delete, right click, delete comments, and under home tab, you can select no fill color. All right, so let's try to fit a distribution here. Crystal ball, define an assumption, fit distribution to the data, click on this little icon, and then income statement, and select the data from the beginning till the end. 3% till -5%. Click OK to see whether we can find any distribution. OK, OK. And we could actually, that's not bad. So logistic distribution. Okay, you can assume this is the case. If you don't like this assumption, just use an empirical distribution. Again, I showed how to use empirical distribution in my previous video series. Click, again, why am I choosing logistic? Because p-value is greater than 0.05. So that's beautiful. Click accept. Do I like these crazy numbers? Probably not. Let me just again put an upper and lower bound. Upper bound here. By the way, again, we forget to lock our distribution. I press escape and you see whether I can do click fit. Let me just, okay, they are locked. That's beautiful. So click OK. Make sure you lock your data. Okay, again, that's perfect. Accept it. Upper bound. I'm gonna look at my income statement to see whether I see a crazy number there. I don't want to go so crazy on this. So let me see most recent -5%. Upper bound 12, 16 is reasonable. I think 18 is still reasonable. 45 is way too big. I would like to use 18%. I think that's pretty good as an upper bound. And press F4 to lock it. F4. Make sure that you have dollar symbol in front of your letter and the number. Enter. I would like to do the same thing for lower bound. Okay, so lower bound. Again, I will go back to income statement to see what's reasonable here. Again, this is not an exact science. You got to come up with your own story, but I'm just trying to look at the historical data here. -5% sounds reasonable to me. 7 is reasonable. -13, 15 reasonable. -44 is way too much. I think -15% is a reasonable assumption, which happened in 2012. Press F4 to lock this. F4, F4, lock the cells. All right, enter. I truncate my data. You can see this is the distribution that I created. Enter and click OK. Again, you can see that on average, I'm assuming that it's going to be improvement because lack of competition in the market of 1.94, almost 2%, not so much, but a little bit. Copy this, highlight this area right here, and then I will paste crystal ball paste it. And I will assume that last year terminal value is 0. Control S to save your file. Make sure you save your file periodically. You don't want to lose it. Now I will look at the EBIT to revenue base here. So click on this is equal to EBIT to revenue. We calculate it here. Control Shift right arrow to go all the way right. Just click on this 33% because that's the most recent one. Enter. And then you see this is going to increase with my 2% assumption all the way to 40%. Control S to save it. Now let's take a look at the EBIT. Basically, this calculation is automatic. Beautiful. There's nothing I need to do here. Row 18. I don't need to do anything here. Automatic calculations. And then reinvestment rate. Let's calculate the reinvestment rate for Intel. Basically, it's equal to revenue that we obtained here, divide by, in parentheses, go to key stats, look at the long-term total debt, not long-term interest accruing debt, and plus the book value of common equity minus the cash and short-term investments, and close your parentheses, and looks like this rate is 0.84. That actually is not that impressive, because that shows me that in comparison to Apple, it's very capital intensive business. What does it tell us? To be able to generate 84 cents of revenue, I need to spend $1 capital. For Apple, it was with $1 capital, I could generate $2.60 of revenue. So this is not that good, but it is what it is. Again, I would just type here 0.84 because it's a decision. I want to make sure that I can play with it. 0.84, and click on that yellow cell again, define decision, and I will define a lower bound, upper bound for here, the reasonable rate. I think that it's reasonable to assume between 0.7 to maybe 1, and discrete, and I will do increments of 0.1, and click OK. Perfect. I want to make sure I change the here to decision, define decision. Okay, so I need to define decision here. To be able to do that, I need to change this one to normal cell without formula, 13.44. That's what we calculated. Now let's do a define decision. And I think it's reasonable to assume the cap rate of 21% here. And minimum of, I think, 10% is a good assumption, because recently I saw that happen last 3 years ago. Okay, step of, let's say, 1%. Okay, Control S to save it. Again, we are here. Now, based on this, automatically calculates my reinvestment capital investments. And then free cash flow is calculated here. Estimates start from $18 billion to $40 billion 10, 11 years from now. Beautiful. Present value of future cash flows are calculated here for terminal value as well. Very nicely. And now let's look at the total debt for this company. Control S to save. Is equal to, go to key stat. Total debt is right here, $38 billion. Cash is equal to, go to key stats, and cash and short-term investment, 25.8 billion. And intrinsic value, not intrinsic. Let's calculate intrinsic value of equity, which is automatically calculated. Sum of all these values minus debt plus cash looks like $726 billion. And let's calculate per share how much it is. So basically, this is intrinsic value of equity divided by number of shares outstanding. Go to key stats. You can see shares outstanding here. So I see that intrinsic value per share is $107. Again, I haven't looked at this price yet. I don't want to look at the price and confuse myself. So now Intel, I would like to buy this company. It's a really good company, either 145 strong buy at 119, and I wouldn't sell it until 222. But if you think that Intel is not as good as Apple, what you may want to switch to is say, hey, I'm gonna buy it at strong buy only, which is strong, which is right here. And I would sell it. I won't wait until strong sell right there. So I think for me, Intel probably I'm a little bit more conservative. I'm okay with either way, but I think this is my orange ones are my 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 taste here. Strong buy is 119, and I would sell it at 196. Any number between those two, I would hold on to the company shares based on my deterministic value. So let's take a look at it. What Intel's stock price is right now in August. By the way, today is August 9th, 2020. So let's take a look at stock price. Again, I haven't looked at stock price until now. That's important because you don't wanna look at the price first and lie to yourself. Intel stock price currently is $48. I think this company is very, very cheap, no matter where you look at it. And let's take a look at historically, last 5 years, this company was around $70 highest in last 5 years, and currently it's $48. I think it's very cheap company. Again, you gotta understand other factors. I'm just looking at pure finance point of view, and if I look at maximum, you can see that this company was much higher in the past, almost $80 per share. It had some hard times, and it's recovered, but now it's again cheaper. It looks like it's disappointing news. There are some disappointing news about this. Again, these are type of companies that I really like. Look at this PE ratio is very low. S&P right now is almost 30. Apple is 33. So I think this is a really promising company in terms of evaluations. So I would buy this company right now. I would definitely buy this company. I think it is significantly below its intrinsic value. All right. Okay, so let's look at this, the more stochastic model, where random model for randomness, considering randomness. Crystal ball, I will run it for 10,000 simulations. Let's start it to see what's going on with this company. All right, my simulation is done. View charts, and I would like to see the forecast charts to see what's going on. Oh, I need to define my forecast first. Sorry about that. I will click over here and define this as my forecast. Yes, yes, okay, and run it again. Okay, so these are the simulation results. Again, I would like to plug in the current price value, which is $48. So if I plug that in right here, 48, enter, I think we see the risk is 0.03. I think it is very, very unlikely that we lose money if we buy this company at this current price. I think this is a great buy. Again, you need to look at other factors, but from intrinsic value point of view, I think this is beautiful. Let me just copy this and paste in my Excel file. And let's take a look at, again, view charts and see the forecast charts and intrinsic value, open, and I'll look at view percentiles to see what's going on. Control right click, copy percentiles. I would like to paste it here. Okay, so again, this is not Apple. I would probably want to have more safety in this company, like maybe 20th or 10th percentile. So let's go 20%. It's not horrible company. It's pretty good company, but not Apple again. Orange, I would just choose for orange. So I would buy this company based on my simulation result, any price below 116. And obviously the price is much lower than that. and I would sell this company probably whenever I hit around 50 to 60 percentile. So let's go 60 percentile right here. So I would buy Intel based on these numbers and hold on to it forever, because I have a great upside from $50 right now, $45. So I can wait until 175, and I wouldn't feel bad about the company. So if you want to look at the sensitivity analysis, click crystal ball, and you can view charts and look at the sensitivity charts. New one, intrinsic value, okay. And you can see that the most important factor here is the profitability, and especially at the beginning. And you can see that that's create the biggest portion of sensitivity here. And also, if you want to look at the tornado chart that we did for Apple as well. Next, let's add decision variables. Next, and then run. You can see that beta coefficient is the most important factor here again. If the beta coefficient is going to be much higher, the value is going to go lower, and the other factors don't impact much. Spider chart also shows us the beta coefficient effect. So I'm going to save this to my D drive as well. And I will label it as blah, 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 sensitivity. Okay, so what if it looks like this is impressive, right? This is great. What if I play with the numbers a little bit to see whether in worst case scenario, whether this is a good buy, right? So what if I just change manually this beta coefficient from 0.69 to 1, market risk, and what if I change the tax rate from 13% to, let's say, more higher number, let's say 16%, similar to what we assume for Apple, what would happen, right? So you can see that, again, my intrinsic value per share on average is $115. And if I run the simulation again, even for these conservative cases, still you can see that my 10 percentile is greater than 45. I mean, this is almost impossible to lose money if we consider the simulation intrinsic value. Again, my value might be wrong, but we got to understand the business. But you see the probability of losing money is very, very minimal here. So I think that this company, Intel, is a great opportunity right now to consider buying and holding in our portfolio for a long term. So let me just change this one to original value. I think 1344. I think this one was 0.64. But I think this is a great company to, again, buy and hold. Let me know what you think in comments below. That's it for this video. Until next video, enjoy valuations.